All right, guys, quick disclaimer. Past profits don't guarantee future results. Trading does contain risk. While trading in the markets, please practice proper risk management. Today will be an educational session. Today is 11/11/2022, and today we're gonna be going over a lot of different things. Hopefully we can pack in everything that I want to go over, but we're gonna talk about imbalances. We're gonna talk about order blocks. We're gonna talk about divergences, and hopefully anybody that has any questions, feel free to drop them in the chat as we go along. Um, and we will answer them as they come. But with that said, I'm gonna go ahead and share my screen. You guys can see my screen, right?
Yeah, you're good.
All right. So the first thing first, guys, I want to actually go over is Euro GBP. Euro GBP last night, we were waiting for price to come back to this 200 area for a potential buy. Now, we got confirmation of the buy once we broke this consolidation. Price created a higher high here, but while price pushed up, it created an imbalance from here to here. And I have figured out how the new replay system works, so that way I can go ahead, unlike last week, I couldn't show you guys, but this week I can. So as we play it out, we can see price action starting to push down. Doesn't give us our entry, pushes away. This is where we say patience patience is key. We let the market come to us. Look at this, guys, 5-minute time frame. We go down to 1 minute. Activation, price pushed down, price pushed up, and then it continued to push up. And that was just from the rules, right? The rules of price creating a higher high for a buy, and then finding the unhealthy price movement within that up move that occurred, that broke structure. So this is the candle that broke structure. There's a little minor unhealthy price movement in between this candle here, creating an imbalance, and that's why we were able to get the reaction here. Now, this area and this area down here are what? What areas are these, guys? What is this area here? Anybody in the chat? We'll go with Virginia. Virginia, what would this be? Price comes down, pushes away, price comes back down, pushes away. What would this area be? Support. Yep, Luis. Okay. Support is one answer. And then another answer would be that if this was our previous low and now we have this as our new low, right? So this would be a higher low. So that we have our higher low, we have our higher high, we have price come back, fill the 50%, and then price pushes away from that area. Now, when we play it out further, you can see how this whole area was respected. Now, for when it comes to multiple entries, I personally don't take it after the second to third time. But as you guys can see, that as long as it's price is respecting it, this imbalance, it usually it acts as a significant support. So for us to be able to look to buy again, we can't just buy off the same area because let me pause this real quick. What just happened? Or what didn't just happen? What didn't just happen? Feel free, anybody want, John, what did not occur? Chris, correct. No higher high. Boom. So because there was no higher high, we have to what? What are we doing? We're gonna wait for a new high to be created and then what? And then we're gonna look for a new area to potentially buy from, right? Once we have a new high, we're gonna wait for price to come back to a bullish imbalance to look for a potential buy. So we're gonna continue. We're still not getting the new high. at the same time, we're not getting a lower low either. So what is this called? This is called consolidation, guys. When price is creating equal highs and equal lows, we have a consolidating area. And there are, strategies that you can trade for consolidating markets. But for this particular strategy with the imbalance, we want to see the higher high and the higher low create an unhealthy price movement, and then that's the area of interest. So let's continue this and see if we get the new high. Not yet. Still not, but it's still respecting this area. So we're still in the consolidating market. Uh-oh. What just happened? Price just finally created a new high. So if this is our new high and price is finding support at this area, what is this area now? What is this area now? Our new higher low. Yep. And our new support area. Awesome. Now from this area, now that we've pushed up, breaking structure, breaking this consolidated area that we've been in, creating a new high. Now we're just waiting for that unhealthy price movement for us to be able to look for a potential entry. Let's play forward. I'm going to pause it right there. It is acting as support, correct? It's a significant area of interest. Now take a look at this. This is a 5-minute time frame on Euro GBP. Price has created a higher high. We have confirmation of higher lows. These are our higher lows. And what happened? From the break of the structure, what happened? It created a unhealthy price move within an imbalance. An imbalance created another imbalance. So this would be 50% of that imbalance. Now let's see what price action does. It just blasted right through. And then comes back up. We would have lost this trade. Let's see. Activation, 1, 2, 3, 4, 5, 6. Yep, this trade would have been a loss. Go back to the 5-minute. Let's play it again. We're not getting higher highs yet. Now we are. We have a higher low. This is our higher low. Why would I like this area here? This area here. So this was a losing trade. Let's just notify this or make notice of this. This entry, this first entry was a loss. Or the second entry was a loss. First entry was a win. Exactly. Exactly, Chris. We have an order block plus an imbalance, which based off of our rules, this is a high probability entry. So the loss that just incurred, let's see if we're gonna respect this area when price comes back to it and give us our trade. So let me delete that and play it again. Activation. Price came back to the low, guys. And then started pushing up. So we would have lost a high probability trade. Now I'm showing you guys this because I want you guys to see that not everything is always going to go out as planned. It's not always going to be, we're not always going to win every trade. But based off the rules, based off of back testing, like we're doing live now, you will see price react from these areas. Let's continue. So we have a massive imbalance from here to here, creating a higher high, creating higher lows. Right now we're 1 and 2. Yep, I'll point to it. 1 second. Just want to wait for price. And the imbalance is where price action has not come back to. So you see how, let me show it down. First off, before we get too far ahead of ourselves, let me show the, wait. So right here. This is the order block. This would be the order block price. This is the down move, and then we have an engulfing candle. So this candle here would be the order block. Within this order block, it created an imbalance right here. This imbalance, although we've seen some type of reaction here, let's just check it out. Go to 1 minute. Oh, guys, we were looking on the wrong time frame. We were looking on the 5 minute. Look, this is the high probability trade. Price came here, 1 minute, 2 minute, 3 minute. We actually would have cleared that, guys. My bad. My bad. High probability entry. This would have been the clear right here. Because even this would have been the first time it came back from here. So even if it was from this area, we still would have won the trade because this would have been activation. 1, 2, 3, 4. 3rd minute price pushed all the way as high as up to 347. So my bad about that, guys. My bad. We were looking on the 5 minute, not the 1 minute. So this would have, where the blue, where this blue line is, this would have been our activation candle and then 3 minutes out. So now going back to the 5 minute time frame, let me just refresh it. Our new imbalance that we're coming from. So actually I have to, this one was a loss and this one was a win. Would be right here. You guys see this imbalance? The imbalance. You see how this candle is a full complete candle with no wick? And there's the start of this candle has no wick. This is the previous or the closest wick to this wick. So that tells me that price action has never, since creating this here, price hasn't come back into this area yet. Now, an example of where price did come back would be this candle, okay? Do we see how this candle is there's pretty much no wick at the bottom and there's very wick at the top. So some people would be like, well, there was an imbalance in this candle here, but the very next candle wicked all the way back up into this area. So this is what you would consider healthy price movement. Price wicked down, wicked up, price pushed back down. Is that making sense to you guys? Before I go further with imbalance in the order blocks, does that make sense to you guys? No, the wicks do mean something. That's where we're taking the imbalance from. We're So if this wick was down here, then that means price would have never been here yet. Does that make sense? But because the wick is here, we put it right here because price hasn't come back in this area. So this whole area from this wick to this wick and over from right here, this part of the candle, this is a gap. Price hasn't come back to it yet, but when it does, it's going to be potentially an area of interest. And now when I say area of interest, when it comes back to the 50, we should see a reaction. But remember, I always tell you guys while we're trading, I always look for multiple confluences, multiple confirmations. Is the imbalance at a support area? This trade here, guys, we lost it, but it was a beautiful entry. Why? Why was this a beautiful entry? Because it was at the retest of a support area of which would act as resistance, right? It was acting as a resistance. Price broke it, so we know if price breaks the resistance, it then becomes a support. It flips. So because of that, because knowing that, and then having an imbalance right at the break of that structure, I've always told you guys there's no coincidences either. Did it go our way? Not in the time we needed. No, it did not. The trade was a loss, but price action did still continue to go up that way. And this is why I'm saying you want to back test for binary options, but you also want to back test this for Forex, because if you're taking a buy off of this 50% imbalance for Forex, and you're taking a 3-to-1 or 1-to-3 risk reward where you're risking 10 pips and you're going for 30, you could win a trade that in binary options we might take the loss. Like we would have took the loss on this trade, but if you would have bought it off that imbalance and then put your stop loss below this order block or this support area, you still would be in the trade for a Forex trade, right? I'm not trying to confuse you guys, but I'm trying to get you guys to see the bigger picture. I want this to be of value for you, not just trading binary options. I want this to be of value for you when you trade, when you look at the Forex market now, when you're analyzing your break and retest or your market structure, whatever, it's buying off a support or resistance or trend lines. I want you to maybe have this as additional tool that you can use for confirmation. You could be like, well, there's an order block right here. Maybe I should wait for price to come up a little higher, right? Because guys, you can win a trade with a gigantic stop loss, but you could be in nasty drawdown, have high anxiety, or you could wait for these areas of potential interest that are going to be sniper. Now, when I say sniper, I'm going to show you what I'm talking about with our BTC trade, and then we'll get back to Euro GBP. BTC USDT yesterday, we were waiting for this trade. We were waiting and waiting and waiting for price to come back up to 17,486. Let's play it out, see what happens. Price almost hit it, but to be fair, it did not hit it. So we're gonna continue to play it out. Some of you guys probably took it there and cleared it. And then others waited for the exact entry and still cleared it, right? So when I say patience is everything, it really is, guys, because yeah, we missed it on our session, but we had this trade as an area of importance. Why was this area of importance? And I'm going to show you guys. We were in a downtrend. Primary trend is down. Secondary trend was up. We stalled out here. We didn't create higher highs after this point, right? Sorry guys, the chat box is in my way, but what I'm trying to show you is that we have an area right here. So price didn't create any highs. It rejected. Let me show you in the higher time frame so it's a little easier for you guys to see. Okay. And remember, support and resistance aren't always just some even line where support is support and resistance is resistance. This area is support to me because of this bullish engulfing order block and this bearish engulfing order block here. Now I'm gonna zoom in real quick just to show those, make note of that. Price is pushing down. This is an order block. This candle here is the first candle after the down move, and it's a bullish engulfing candle. So this would be the order block, which is why when you look to the right, we got reaction here. Did it hold? No, it didn't hold. Would we have took the buy? No, we wouldn't have took the buy either because price didn't create a new high. But this is why there was some reaction here, was because of the order block. Now, when I say we want to look for areas of confluence, what does that necessarily mean? Well, we have block flow here. We have one bullish order block here. And then we have price breaking, pushing down, and then price push back up. And then what happened? We have a bearish engulfing order block, right? Right here. Oops. I don't know why it does that to us sometimes, guys. I'm trying to push it down there. It keeps giving me the check mark. But anyway, this candle right here is the bearish engulfing order block. Price pushed up. This is the first candle after the up move, and it is a bearish engulfing. So this is your bearish engulfing order block. So at this area, we have an area of confluence, right? Now with that, more than likely, yes. It doesn't have to be a complete engulfing candle, but more than likely, for simplicity purposes, yes. But it comes at the end of the trend. Okay, it's important. It's not it's not like any engulfing candle. It's coming from the trend. So like this is a downtrend. We have a engulfing order block here. Again, this is a minor downtrend. We have an engulfing order block here. Price reacted from it right here. Do you see this? But just because it doesn't, you're looking for like the best of the best, but I'm just showing you examples of why price reacts at certain areas in the market. Okay. So we waited for that BTC trade. The confirmation for that was what? If we're looking for sells, what else are we looking for? Confirmation of a what? We want to see the new low come in, which happens here. This is the low. So now with the low, the low came in, breaking the structure, knowing that we haven't created any higher highs, that we're still respecting the overall trend, which is down, right? We already determined that. We go to the 5-minute area and we have a break of structure, creating an imbalance in this candle. The imbalance, guys, is from this wick to the second wick here. So you guys can see it. It's just here. This is the imbalance, okay? So when price comes back up and fills 50% of that, that was our confirmation to get in. As soon as price comes up, we take the sell. Let's play it out. We already see how it reacted here and there. But for those of you guys that may be interested in trading Forex, I mean, look what type of stop loss you have, right? And Nick, why would this be my stop loss? Let me pause this real quick. If I'm trading Forex, why would this be my stop loss right here?
If you're trading
Forex.
Can you zoom in a little bit?
Yep. Why would this be my stop loss? Why would this area be my stop loss?
Well, that would be your resistance. You want to go a little bit above that though, right?
Exactly. So you want to go a little bit above the order block, right? So this is the up move, and then from this up move, we have a bearish engulfing candle, which creates that resistance slash order block. And then we put our stop loss right above it. And now we're looking for sells. And then we have this area of interest that we already have marked up. We wait for that area or set a sell limit. and watch how it plays out. And if I'm not sure if we're going to continue to be bearish, where would my take profit be? If I'm not too sure we're going to create a new low, where would my take profit be? Anybody feel free to answer. If I'm selling, nope. If I'm selling, nope. If I'm unsure of where the market is headed, but I believe it is going down, I'm not sure if it's going to create a new low, where would my take profit be? It would be at the previous low, guys. It would be at the previous support. Exactly. It would be at the previous support. So that being said, our take profit area would be somewhere in here. Price still, look at this, guys. Price didn't drop when we wanted it to. But with that said, did price give us ever a new high? Or did price respect this order block from the left the whole entire time? Or this imbalance here? And now I know you guys hear me always say I love imbalances coming from an order block, and this is what I mean right here. This is a prime example. The imbalance wasn't directly off of the order block, but it came from that move. It came from that move. Now, this is looking at it at the 5-minute time frame. We can clearly see that we had the order block, then another candle pushed down. Now, let me just show you something. Now you say, Chris, well, was there an imbalance from the order block? Now there actually is tiny right there. Okay. So this potentially could also have been your stop loss. I didn't see this, but if you would have seen this could have potentially been your stop loss. But for me, I'm always playing it extra safe. I'd rather not get wicked out. And I've had the best when it comes to Forex trading is to put the stop loss above or below the order block. But let's see if this area held. It did, guys. See, that's intelligent. That's insane. And those are the type of trades we look for. Now, and I wasn't sure if price was going to go on and create a new low. But for those of you guys that were on the session the other day, how do I determine where price potentially could go? Is I use the trend fib extension, and I go from the last move to the last down move. So this is the pole, or the flag pole. This would be the pennant going up of the bear flag, and then you have your areas of potential take profit. There's no coincidence that price stopped right here. Guys, I always say that there's no coincidences that price had a reaction right here. It was a 786 Fibonacci extension. Now, for targets, when it comes to using the trend-based Fibonacci extension, I look for the 1.618, and then I also look for the 2.618. So just out of curiosity, let's see how this played out. Because I don't recall looking at this before I just did what I did before the session. Let me speed it up though. So we're not really breaking new lows yet. So we're cautiously optimistic. You know, we probably, if your trade already hit take profit, obviously, but if you were still in the trade, I'm just curious to see if price does push down here. Anybody know what current BTC price is? Will kind of give me an idea if it does or not. Or if it hasn't yet, you know, this is a more recent move. It's still in play potentially. Not that I'm saying this, not that this is a trade idea. I'm just saying that based off of our analysis, if price still respects this area, then we could assume or anticipate that price is gonna continue going down. Okay, so yeah, so price is live. Okay, thanks, John. So yeah, so price hasn't come, this is its low. But with that, let's see if we have any other areas that we could be looking for, right? Now, all this is pretty healthy movement. There was a minor imbalance right here. I'm gonna show you guys. There was a minor imbalance between this wick and this wick. And this is your high probability, right? This is that order block breaking structure slash creating an imbalance. And this is a candle that activated. Right? This is, so on the smaller time frame, you would see it better. Let's go to the 1 minute. Actually, let me go back to the 5 because I don't want to get lost. Vertical line. Well, that ain't gonna help. It's the first one. So from the 1 minute, you even have what happens on the higher time frames happens on the lower time frames. So I don't personally trade off the 1 minute time frame, but I just wanted to show you guys that this is the 1 minute bearish engulfing order block. This area is a nice imbalance area because why? Why would this area be a good imbalance area? What happened? Price broke the structure. Within that break, it created a very small order block and imbalance. And look what happens. Rejection. Rejection. So that's like 5 and 2, I would say 5 and 2. Now let's take a look at Euro JPY. And this I wanted to show you for two things. I want to show you guys one about the imbalances, but two, I want to show you how to use this RSI divergence indicator to help you confirm if what you see is a divergence, because it'll help you identify the divergence, whether it be bullish or bearish, it'll let you know. And I'm going to show you how you could use this on any time frame to help you out. Because remember, guys, just because we're on a higher time frame right now doesn't mean whatever time frame you are trading, and imbalances, order blocks, divergence, it all occurs, guys. What happens on the higher time frame is just a stronger confirmation of total trend direction. It has more meaning. It's a stronger confirmation. So for example, I'm gonna share with you guys what happened yesterday while I was trading right after our RFX section. I was wondering why price on Euro JPY didn't react at the 5-minute imbalance. So I started looking at the higher time frames, and look what I noticed. We have a support area here with a nice engulfing candle order block here, down move. First engulfing candle after the last down candle. And then what happens over here, guys? We have a bearish imbalance, but a strong bearish candle breaking structure. That's the more important part, right? The more important part is that this candle broke this structure. Now, how strong is this? This happened on the 4-hour time frame. It created a lower low, good catch. Yep. Broke structure, created the low, failed to create a high. Guess what it did for us? It gave us an imbalance at the, look at this. It gave us an imbalance on the breaking candle on the 4-hour time frame. I can't make this up, guys. Take a look. Price comes down, creates a new low, pushes back up. Look, pushes back up. Remember, if you were taking a Forex trade, your stop loss would be what you would want it to be higher than the imbalance, the full imbalance. So it would be just above this area. I'll mark it up so you can see it. Your stop loss you'd want your stop loss just to be higher than the full imbalance. Okay. So now you've noticed, okay, wow, price action just broke structure at a confluenced area. Why is it confluenced, John? Or Chris? One of you guys. Nicholas. Why is it a confluenced area? We have a bullish order block. We have a bearish imbalance. We have structure. Exactly. We have multiple reasons. So this candle here created an imbalance. So where would we take the entry, Chris M? Exactly. Which, ladies and gentlemen, is right here. This is the 50. So what do? You see price creates a new low. You notice that there's an imbalance. What can you do? You could put a sell limit there. And here's the thing, where am I taking profit at? Now guys, if you believe price action, now this is important because this is a secret. This is the sauce, okay? This is the sauce, and this is what I need you guys to understand. I'm showing you this on the higher time frames because if you have confirmation of directional confirmation in the market, then what does that mean for you on the smaller time frames, ladies and gentlemen? Please tell me in the chat. Exactly, John. Exactly. No different on lower. So if it's happening on the lower, does it give us more opportunities when it comes to binary options? Yes. We just look for areas of interest on the lower time frame where price potentially is going to come back to, like maybe a bearish engulfing order block on the 5-minute time frame, or a imbalance at a break of structure. It's going to allow you to take multiple entries, and you could be confident in your analysis because you're like, well, on the higher time frame is we are in a downtrend. On the lower time frame, we're starting to really head in the downtrend. And I know that I could be looking to take sells when the market gives us the opportunity and it presents itself. So with that being said, when do you stop selling if you're selling in binary options? And also, where would your take profit be? Well, it's going to be at the previous support or area of interest. Now, look at this. Look at this. This is our support area. Why? Well, we have a order block right here. We have a bullish engulfing order block right here. So that would be our quote unquote support area, or that would be our take profit area. No, we're not gonna be greedy and say, oh, Chris, this is a take profit because this is a support. No, we know better than that. We know that yes, this is support, but we also know that this is the higher low. So now this becomes the support. And what happens, ladies and gentlemen? We take our we successfully execute the Forex trade. In this area here, we know that we're done trading. So any future imbalances that come up, we're probably not going to be taking them because the market respected this order block. And is this order block bullish? Well, you tell me. Did price create a higher high from this area? Yep. Did price come back and respect this imbalance and order block on a higher time frame? Yep. So just because you caught the sell doesn't mean you can't overlook the potential buy or respect the fact like, hey, this is where my trade ends for the day because I'm not sure where the direction of the market's going to go from here. I knew that price needed to come down to that support. We got a massive reaction from that support, and now I'm not sure. So you're done. You've made your profits. You made your 1, 2, 3, 4, 5, 6 successful trades that you needed to in the RFX market, and you caught a 1 to 3 risk reward, which you risk 65 pips and you get 200. I mean, what happens on the higher time frame happens on the lower time frame. If you have a sense of direction on the higher time frame, it's only going to help you determine where you should be looking to take trades on the lower time frame. Okay. Now moving on, and this is I want to touch on this, and we'll go into this more next class because I'm bringing it up late of the session, but I want to talk about it because I showed you guys right here. For those of you guys that have been following us or have been a student of ours for a while, you guys know that on when it comes to divergences, we take the trade on the fourth touch, fifth touch, second touch. What touch, guys? What touch of the divergence do we take a trade? Exactly. Nicholas Lau says third. Now take a look at this, guys. Look at this. We have a bearish divergence setting up, and the third touch happens to be the third touch. It touched here, it touched again here, it touched again here. We have confirmation that we should be looking to sell the market when price comes up here. Now this is a monster drop, guys. 400 pips in 1 4-hour candle, but you were prepared for it because you seen the bearish divergence in play. You got your third touch and you entered. Now that was a beautiful example of a sell. Now take a look. We have price action create. Well, actually, let me go ahead and explain this a little more because I don't think I did a good job there. So when it comes to divergences, the RSI and price action are not in agreement, okay? Price action is doing one thing and the RSI is doing the other. So for this example here, price action is creating higher highs. The RSI is creating lower highs. They're not in agreement. That tells us that there's a divergence occurring in the market. Now, when we go to take the trade or execute the trade, regardless if it's binary options or if it's Forex, you want to make sure that it's touched it 3 times solid, right? We have our first touch setting up. We have our second touch, right? These 2 candles, this would be our second touch. And then boom, the third touch is the wick. Now this would have been your entry, and you can see, you just take the bag whenever you're happy. Now that was a bearish divergence. Now let's take a look at bullish divergence. So if you think if the RSI and the divergence are disagreement where we're creating higher highs in price action, but the RSI is creating lower highs, it's the exact opposite when you think of bullish divergence, okay? So RSI could be creating equal or higher highs, and price action could be creating, I'm sorry, I'm gonna say that one more time. Price action on the RSI could be creating equal or higher lows, or price action is creating lower lows, okay? So a beautiful example is right here. This is a low. This is a lower low. Right here. This is a lower low from this low. Would you agree? Is price action here lower than it is over here? Yes or yes? Okay. But the RSI divergence indicator that we're using, or you could notice this with the RSI as well. The RSI, however, is showing us that while price was over here and price is over here, we have equal lows. So what is that called? When that happens, that's called a bullish divergence. Same rule applies. You wait for the third touch of the bullish divergence, and then you enter to buy. Touched it here, so this would be the first touch. Price comes back over here, touches it again, and then again. Touches it here for 1, again, touches it here for 2, and then right here, it touches it for the third time. So this would be your entry area this would be your entry area. To take the buy. Now, again, where are you taking your profit? Where are you stopping buying? Well, you are stopping buying when you don't have any more confirmations. You could buy up to the previous resistance, which here is perfect, right? This area here is a perfect area to take profit. So you will only be able to draw on the line. So you will only be able to draw the line after the second touch. Correct. Yeah, exactly. You need to be able to see it touch one time, right? So like, you're not going to know this is it. You have to wait to see price action where it goes, and then you could place it, and you could say, okay, we touched here for once. It touched here the second time, and then you got in here on the third touch, right? So just because you got in here, price consolidated a little bit and then started going the opposite way. Does anybody have any questions on anything that was shared on the session or anything that I just shared right now? For those of you guys that want to use this indicator, it's free on TradingView. I'm going to put the it's RSI divergence indicator. That's what it's called, guys. I need it to marinate. I'm mind blown right now. Does anybody have any questions? Is it on default? Yes, it's on default. I'm using it on default, correct. I personally don't use it. I'm showing you guys that you can utilize it to help you identify the divergences. And what I notice is it helps me identify some, because this would have been a hidden divergence that most people miss. But I would, with the tool's help, we would have been able to see this playing out. I know there's a lot of information. Again, guys, when it comes to the rules, so out of the trades, we lost a high probability trade, we won a high probability trade, and we won, lost one more, and we won like 3 or 4 more. And I'm sure we can continue to go through and back test this, and we'll get to that 85% accuracy, because guys, I promise we've back tested it numerous times on different pairs, and it works. For homework, for those of you guys that want to participate, I'm going to leave, it's going to be a 2-part homework. The first one is going to be find 10 imbalances off of 10 imbalances where you would, we'll say 5 imbalances of areas of interest that could be a solid good trade, right? Like maybe it's an imbalance at the break of structure, maybe it's an imbalance coming from an order block. Surprise me. 5 of those, and then for those of you that are comfortable or want to give it a try, go through and find 3 or 4 divergence setups, maybe 2 bearish, 2 bullish, and mark them up and see how they played out. Is there something spreadsheet to find the different candles? There's a book called what is it called? I believe it's called the I'm not sure the name. I think we have access to it though. If we do, I'll throw it in the RFX chat. It's all about candles. I personally don't focus too much on the candles as much as I focus on like when it's an order block or if it's an imbalance. But there are, 3 green soldiers, the different setups, 3 bear soldiers, 3 red crows, however they say it. Yeah. Yeah, there's not a spreadsheet on it
Chris,
really.
I
There's
can't
just
type that.
different
I
examples
can't.
of us, marking up the chart for educational purposes of areas where we've taken trades before.
Are you there?
Yep, I'm gonna go ahead and stop the recording, guys, and I'll open it up for voice combo.